Welcome to Eliot Rose Asset Management. I'm Jason Sipperstein, Wealth Manager here with Gary Sipperstein, President of the firm. Just wanted to provide with you our thoughts on the third quarter. So Gary, what do you think of the third quarter? What are your thoughts?
Well, it's been brutal. The market's had a substantial correction, and the correction is continuing. People are fearful of the rise in interest rates and the uncertainty that the Fed has been delaying, then they're going to raise, then they're going to delay, then they're going to raise. So they expect them to do an increase in rates by year end, but it hasn't happened yet, and that's created a lot of volatility.
And the interesting thing is our portfolios have actually been showing some relative strength to the market. Do you attribute that to the rotation from growth into value?
Our stocks, usually when we purchase our investments, we have a margin of safety, and that's the definition of value stocks. So when the market got silly earlier this year and last year with the Shake Shacks and the GoPros and the Fitbits and biotech stocks, and everything was very overvalued from a fundamental point of view, we didn't participate. And the market can get silly for time periods here and there. And now that the market's correcting and people are getting religion again, they're interested in cash, they're interested in no debt, they're interested in earnings, they're interested in low PEs. So all of a sudden, we're actually flat to even from where we were earlier this year, while the market has dropped about 10 or 15%.
Yeah. So during the good times, it's sort of difficult to tell that our risk measures are put into the portfolio, but during the down times, it becomes more evident.
Absolutely. We were just banging our heads against the wall trying to figure out why our stocks weren't going up when they had, as I mentioned earlier, great earnings, great balance sheets, great potential. But people were looking for things that were going up every single day, that were hot and, if you will, sexy. But now that they're getting religion again, as I mentioned, fundamentals matter.
Right.
And we think our stocks will continue to do well on a relative basis, even with the market going down. And then if the market does bottom and turn and come out of this correction, we think, since people have recently gotten hurt, that they're going to be much more careful going forward and buy the kinds of stocks that we own.
Yep. And while volatility can be unnerving, it's just par for the course. That's how markets work. They never go up in a straight line. They never go down in a straight line.
Absolutely. We haven't had a correction since 2011. So we're very, very overdue. And this is just par for the course for bull markets. So we don't think it's anything more than that, as painful as it is. And we think it'll set the stage for an continuing and enduring bull market for the next couple of years.
Okay. Thanks for tuning in, and we'll speak with you soon.